guess you lose some and win some. Long as the outcome is income.
Welcome back to the Outcomes Income podcast with your hosts, Saif Derzi and Reese Booth. Today I'm joined by none other than Milan from Kettel Homes. Now we all know the headlines are all talking about the interest rates at the minute being unaffordable for a lot of people looking to buy a home. Kettel Homes solves that problem. It allows people to move into a property without a mortgage. It does this based on 36-month rental guarantee with an option to buy at the end. Listen in and let Milan tell you all about it. Milan, welcome to the Outcomes Income podcast.
Thank you, Saif. Good to be here.
Yeah, so I met you and got introduced via Tarek Mubarak. Obviously, you were doing a talk as well, which is quite cool for the Titans. So shout out to Manny with regards to that. And you are obviously a key member in running Kettel Homes, which is a really, really interesting business model. Before we get into that and people start to understand more about that, you know, what's your history? What's your background? Kind of what have you been doing previous to Kettel Homes?
Yeah, thanks, Saif. So I have a background in finance. I spent about 10 years in private equity real estate at a firm called Terra Firma, where I did a bunch of operation and residential real estate at the institutional scale. So 10 years of that. I also spent a couple of years as a developer in London, outside of Zone 1, which was quite an interesting kind of smaller scale experience to match with my institutional experience at Terra Firma. And then I set up Kettel Homes about a year and a half ago, together with my two other co-founders.
Nice. So, yeah, coming in from a really institutional, I'd say more sort of granular point of view, really, in terms of the operations and the execution, but at the same time coming in with a pretty big vision, because I know from our previous conversations, you look more towards the US and think, you know, that's not happening in the UK. We've got loads more to give in the UK. So again, just for our listeners, just for the benefit of them, what is Kettel Homes and what is the vision that you guys have set out to try and achieve with regards to Kettel Homes?
Yeah, so we are a rent-to-own platform, which is a new concept to the UK. It has been around in the States for about 10 years now. There are quite a few very large businesses running this program. In the UK, we could think of it simply as one of the solutions to replace Help to Buy. So working obviously alongside shared ownership, which exists, deposit boosters, equity loans, etc. The program itself is very simple. That is the idea, and kind of that's how we designed it as well. It is supposed to do effectively what it kind of says on the tin. We would purchase homes that our customers would choose, but they cannot get a mortgage today. They would then have a fixed rental period, and they will then have an option agreement to purchase the home from us at the end of their rental period at a fixed price. So we create a structured path to home ownership. And one very important thing, or maybe two very important things, one is we fix, the rent and obviously the repurchase price, so people know exactly what that pathway to home ownership looks like. I forgot what the second thing was, but we'll get into much more detail as we talk along.
Got you. So, and funny enough, we had a scenario recently where we have a tenanted property, so really good tenants living at the property, paying pretty good rent as well, probably more than where the mortgage would be as of today. And we put the property up for sale just generally because we're coming close to the end of our fixed term mortgage, and the tenant wanted to buy it. Now the problem was the tenant couldn't buy it at the time because obviously they hadn't had. I think they needed about 3 years worth of accounts. They're self-employed. Mm-hmm. They only had about 2 years, so they had a year to go. So would that be a scenario where you would be able to come in potentially if they came to you and said, I rent this house at the minute, I'm looking to basically own it. Would that be a potential scenario that would work with you guys? Is that kind of just to explain it?
Yeah, definitely. So majority of our customers struggle with deposit. Large majority, I think 4 out of 5 effectively do not have, 10% or even 5% for a 95 LTV mortgages. However, some of them have either underdeveloped credit or situation like you mentioned effectively where, they cannot get a mortgage today. Maybe recent employment, maybe self-employed, etc. So our program is ideal for them because, they effectively lock in buying the home or having the option to buy the home in 3 years, but we help them during the 3-year rental period to build up their credit and build a bit more history and effectively put them in a position where they can get a mortgage after 3 years. And you just reminded me actually what my second point was on why our program is interesting, which is it's binary for us. We take people from 0 to 100. They either own or do not, contrary to shared ownership, which of course there's staircasing and a bit of complication there, we think. But our aim is to get people to own the homes outright as soon as possible. Hence, kind of the 3-year duration, which we think is probably the shortest we can allow people.
Excellent. And I guess from people's point of view, so some people might know this model, I guess, is more like a lease option or a rent option. So basically, you've got either a lease or rent control over a property for a set period of time, and then you have a fixed option to buy it at a fixed price within that period of time, or a set duration as well. So that's hopefully how a lot of the audience can kind of understand it. But you guys are doing this on a massive scale, or looking to try and create this to do this on a huge scale. So just before we kind of get into that scale side of things, what's a typical criteria around the kind of properties that you would kind of look to accept, or what would you typically look to decline?
Yeah, so we want to be kind of as open as possible. Of course, being a relatively young business, there's kind of more constraints now versus maybe in 5 years from today, where we will probably be covering all types of properties nationally. Today, we are active in Midlands and Northwest. We only look at freehold houses, so no flats. What in the investment world people call single family, which is quite a strange expression, but effectively freehold houses. And we are focusing on new build houses over the next 2 years. This is not, of course, forward funding, etc. It's really the existing build stock. The reason for that is twofold. I mean, from customers' perspective, like Help to Buy was doing just with new build, there is a lot of benefit with acquiring a new home in terms of builder warranties, obviously EPC, very energy efficient, etc. And then also we are from another social impact perspective, and we will talk about social impact and a number of things we're doing there. But we're also trying to effectively purchase the stock from the house builders so that they can effectively be building more, which is a big problem. Obviously, demand supply in this country, huge supply shortage, and it's getting worse these 2 years. So we are doing our kind of small share of hopefully releasing capital back to house builders so they can build more stock.
Okay, excellent, understood. So look, the UK and the US are absolutely miles apart. I listen to a lot of people from the US take ideas and then bring it to the UK because they're so ahead of us in everything that they do, right? But specifically in terms of housing. So from your point of view, where do you see the gap in the market, and where do you really see the vision of where do you want to take this, and do you want to take it beyond where the US is on their models, or do you want to take it to a similar place of where the US is at the minute? Because I know you mentioned something about, is it the largest managing agency in the UK manages 9,000 single families?
8 was the last number I got, maybe up to 9 now.
Eight,
so when we talk,
8,000,
so kind of shifting maybe from the customer to kind of the real estate and institutional side, UK is very poor in terms of PRS, or private rented sector aggregation of stock. So mostly we have family landlords, mums and pops, as they call it in the States. And it is very contrary to what we see in the States as well as in continental Europe. It is also something government has been calling out for in terms of institutional ownership and management of rental stock. So one of the things in the recent white paper is professionalization of the management of units so that people can have a better experience. Of course, when they own, it's a great experience, but also when renting, you want professionalization of that sector. So if we talk about the UK, yes, the largest manager will be about 8,000 units. The largest private business, which actually is listed, but operating in the private market, has sub 10,000 operational units. In the States, there are businesses, when we talk about kind of flats and houses, that own over 100,000 units. And when we talk about just the freehold houses, there are at least 4 businesses now in the States owning more than 40,000 homes. Now, yes, US is obviously much bigger than the UK, but these companies do not even operate across the US. So there is no reason why we shouldn't see this level of aggregation and scale in the UK. And a lot of institutional capital recently has gone into, when I say recently, over the last kind of 3 to 5 years, into what they call build to rent, effectively forward funding developers to buy units that will be then rented. And that, for those guys, is the only way now to access scale from the investment perspective, because there are no books to buy in terms of portfolios traded. Now, maybe just conclude in terms of, when we talk specifically about the freehold houses, which make a large majority of the market in any case, the largest ever transaction to date in the UK was about 920 units a few months ago, for about 200 million. That is like, I mean, might sound like a lot, but it's de minimis. I'll maybe just read back to kind of 10 years ago when I was involved in the IPO of what is today's the largest landlord in Europe in terms of they own flats mostly in Germany, but when we IPO'd them, they had 250,000 flats. That business now has 600,000 flats. So when we talk about 900 homes in the UK being the largest portfolio ever traded in single family, it is quite small. So through effectively this rent-to-own program, which is social impact led, our customers are bringing homes to us. We will then be aggregating, of course, all these homes. After the expiration of the rent-to-own period, most of them, we hope will convert, will effectively be owning the homes. But there is a proportion between 30 and 50%, we estimate, people will not buy the homes. So we will therefore start aggregating the open market book. And when we talk about the scale, we have the aspiration of doing about 10,000 units a year by year 5, which, given the context that I was talking about, will put us pretty quickly as the largest landlord in the country.
Yeah, that's huge. That is really, really big, to be honest with you. And, you know, from my perspective, I've always been fascinated by the US and Invitation Homes and, you know, all of these guys, right? So from my perspective, this is a major, major space that I've been looking into for quite a while. You know, we grew, and albeit on a much smaller scale, but we grew our portfolio to about 90 single families. Mm-hmm. And we were really trying to see if we can get to 1,000. And we could. The biggest issue that we had personally, just from looking at it, is I knew how much time, effort, dedication, and also different team. We would need a different team, a different mindset. I got to a point where I had a little kid, a little child, and for me, I was like, do you know what? I just need a bit of balance at that specific time in my life. Anyway, I needed balance. So yeah, from my perspective, I decided not to kind of go down that route, but I can see how it could happen, and even 10,000, 100,000 units, like you said. So from your perspective, what is the one thing that's holding back people in the UK versus the US from going at this for, you know, at scale? Because I'm sure multiple people have been thinking about it, but no one's actually done it yet.
To be honest, I don't quite know because obviously we have something quite tested in the States. The business which is now the largest in the States in terms of freehold houses called Invitation Homes. They own about 90,000 units by now. They started about 10, 11 years ago. And they were aggregating one by one, even without the rent-to-own scheme, which is even easier because our customers are bringing the homes to us in terms of they're our acquisition tool. So obviously what is necessary for institutional capital is the operating partners, and we're one of them effectively. So creation of our business. There is another business called Brick Lane, which started doing this a few years ago. They don't do rent to own. They just effectively buy open market properties to rent. So it is slowly happening. And obviously people are seeing success stories. Now those companies are making exits. So people are seeing kind of the scale. The largest rent to own business was sold 2 years ago to Blackstone's REIT for $6 billion. So everyone saw that headline 2 years ago and said, hold on, is this something we should try here? Especially because UK is absolutely ripe from a demand supply perspective for this program. So I think it's the advent and kind of us coming up effectively as businesses onto the market, and then obviously raising kind of institutional capital behind us. One only thing I will say there is, so it's what makes this even more possible, what really facilitates this aggregation kind of one by one is the technology. So we are in a way a prop tech business as well as a real estate business, but we have spent, before launching our product, about a year developing technology to be able to underwrite and process both the customers applying as well as obviously then evaluate the properties on the other side to be able to launch. So it's taken us quite a while. We launched then in Q4 last year, and we're looking at like very, very high growth now. But we are something now where institutional capital can come and say, okay, this is a platform through which I can actually achieve that ambition of owning or aggregating single family or freehold houses.
Yeah, absolutely. So you're basically the operating arm that allows institutions to get into residential, residential property ownership or residential properties in general as an asset class.
Yeah.
Because you're basically helping them to create that fixed income out of residential
Yeah.
property, basically.
Yeah.
Yeah, massive.
Yeah.
So your advantage then really is the operations. That the operations and tech. Those are the two things. So, people listening to this right now could take what you've just said, Milan, and try and go do it themselves. But the issue is no one has the tech experience or the operations experience to be able to deliver it, and that is why people have not done that in the UK before.
Yeah, I mean, in the end, as the saying goes, it's all about the execution, not about the idea. So, we haven't invented anything here as well. Obviously, we've adapted it a lot to the UK market. And, in any business, when you start, kind of it all looks easy and you think you know everything. And like when I looked back 3 months in, 6 months in, 9 months in, it's astonishing. You look back and you're like, my goodness, where were we like a year and a half ago? When we raised our first pot of money on the operating side, it was a 10, 20-page business plan. There was nothing there.
Yeah.
And so then you look back, you look at our tech now, you look at what we've created, you look at the processes we've developed. I mean, it is astonishing. We're now able to basically do very large volumes, even with a relatively small team today. And if you think, what we've been able to kind of do is we're looking at doing 300 homes in the next 12 months, then 1,000, then 2,000, then 5, and then 10. That's how we get to kind of doing 10 a year, which is quite a growth. But it's now, having developed the tech, having developed the processes, it's just about expanding the team, but it's all automated and mechanized effectively.
Yeah, ideal. And I think from your perspective, it'll be interesting to understand more about that kind of dynamic of, when you do, you're going, like you said, from sort of 300 to 1,000, 2,000, etc. Those are big jumps. Those are, those are really, really ambitious goals and aggressive goals, which is great. But the reality is it is always going to be the team. So are you going to basically hire a team from your perspective that you're going to give the blueprint to, or are you going to get people that are top talent that have the intuition and bringing experience to the table as well? How do you kind of want to go about forming that team? Because that's going to be the key.
That's a very, very good question. We started off, of course, with generally, or the way we see it is hiring people with some experience. So kind of more at the senior level to develop the process that then, the bigger team will then work with. We are very strong on the operational side in terms of the management of the units, which is potentially the largest challenge, of course, not because it's difficult to do, but just because, as we said, UK is just nowhere in terms of that professionalization. If I say the largest business runs kind of 8,000 single family homes, that just tells you that, our business hopefully will become the largest landlord, and we will have developed in-house that experience and expertise more so than anyone else. However, our CEO, Trevor, comes from that background. Effectively, he built one of the businesses, which is a tenant management platform. So plenty of experience. And our director of operations comes from that company as well. So we started off kind of taking probably the best in class from industry, but then think about all the pitfalls and issues people have or managers have, and kind of trying to address those from day one before we start hiring kind of more junior people. But when the junior people come, a playbook will be there. So then, as I say, it's all about a process. It's not about, I know how to do things, because that is not how you create business. So it's us creating the templates and the processes and the systems that then, anyone can effectively follow that, and we can be successful there. So that is kind of the upside. It will be the same with acquisition. I took a lead there, given my background, but we've developed, evaluation process. We're automating a lot of it. It used to take us 1 man-hour to evaluate a property a year ago. Now we are probably in 15, 20 minutes, and that will continue improving. And so when my kind of next team member comes, it's pretty straightforward in terms of what the process is and how we go about doing things. So that's kind of the approach we take on the team. In terms of the numbers, we'll be 20 people by year end. We'll be 50. Year 2 will be then 100. And when we're doing 10,000 units, somewhere between 400 and 500 people. So it's quite a business.
Wow. So you're just there's so much I want to unpick here, Milan, as well. And I know obviously we've talked about this previously, but just for the benefits of the listeners as well. So your two key advantages at the minute is you don't have to go out finding the properties come to you, which is a massive advantage. So you don't have to put a process in terms of finding it. You just have to put a process in terms of underwriting it. And the second thing is, which is listening into what you've just said, because people are renting to own, and here's the key, they're not just renting to then find somewhere else to live in. They're taking care of the properties. They're more cautious about damaging the properties. And there's a lot more or a lot less operations for you guys to have to deal with than if it was just a normal tenanted property. Is that right?
Yeah, 100%. 100%. So just some of the attractions of our model, but 100%. Our customers have the mentality of owners, and that's the most important thing. As I said, not all will effectively convert, not all will buy in the end, but we're seeing some incredible things from people already. But that's from at least the ops and management perspective, that is really, really interesting aspect of our proposition.
Yeah. I love that. Just coming on to talking about if people don't exercise the option. So effectively, someone says at the end of the 3-year term, for example, I don't want to buy the house. Can we just talk a bit about that? So what then ends up happening? So you guys end up owning the home. That person then has to move out, or can they stay as a tenant, or what's the kind of scenario?
So to kind of maybe just go back and we didn't cover the kind of scheme in a lot of detail, but at the very beginning, the customer will put down a 2% deposit. They will sign a fixed 36-month rental, and they will then sign this option agreement to basically buy the home in 3 years. The 2% deposit is really against the option, so it's kind of an option fee. However, it's not a fee. That money is sitting on our client account and waiting for that tenant to either buy or not buy the home. So it is refunded if they do not buy, and obviously if they do buy, it forms part of their purchase price. So from that perspective, the customers are not worse off when they leave. The most important thing is that we help them save. So there's a huge financial literacy component to what we do, and credit building. So we report all their rental payments and so on. So if you think about someone that basically after 3 years does not want to buy a home, great, they can terminate the option at that point. They will get back the 2% deposit. They pay like a small admin fee, but it's negligible from monetary perspective. And they basically are free to go out and get another property in the open market. And hopefully they would have saved. Maybe they didn't save the full 10%, but we made them or helped them save 5%, 7%, much better than where they were. And we have kind of, from all the research done, people just do not save. That's the biggest problem. So we give them the guardrails to say, you should do that. So in the eventuality where they do not want to buy the home, whether they walk away, they can absolutely continue renting, by the way, because for our investors, they're very happy to hold these units, as we said, and aggregate and have a tenant there. Why not? So if someone wants to continue renting, no problem. Okay. And the most important thing, by the way, they do not burn the first-time buyer stamp duty discount, which you do with shared ownership, with all the other programs. Because in our model, you're a renter until you become the owner. As I said, it's binary. So they walk away. They haven't burned through the first-time buyer stamp duty discount. They have all these savings. They're not worse off at all. So we design it to be a win-win in both scenarios.
Yeah. I've got loads and loads and loads of people that I know that are graduates or a couple of years after graduation, exactly in that scenario. They don't want to rent for too long. They can't save enough of a deposit. But this gives them the absolute middle ground that it's almost like, when your parents try and basically kind of guide you and say, you should save, you should do this. But this is giving them that guide with the fact that they almost feel like they're owning their home from day one here, because they're renting it, but they know they're going to be able to own it at some point. So that's amazing. That's really, really good. Slightly kind of going back, I guess, really to the institutional side of things and really just big picture. So we're looking big picture here, Milan. Now, I've always been a fan of Warren Buffett and everything that Warren Buffett does. And, his saying of, buy businesses with a moat. This is a business absolutely with a moat. Would you agree that the UK government are, as you said previously, pushing for this institutionalization of the PRS sector as a whole? And would you say that now you are going to have a very competitive advantage because there is massive barriers for the smaller landlords, the Mr. and Mrs. Jones that own 1 or 2 properties by accident, and even the kind of mid-sized landlords now, they're all getting pushed out because of regulation, EPC changes, Section 24, etc. And how would you see that as an advantage for you guys moving forward? Because that makes me excited about the sector.
Yeah, I mean, things are kind of moving in the direction of obviously individual landlords, not through limited companies. Because, I mean, when you open up a limited company, you are a business, whether you own 2 units or 10 units or 100 units. That's kind of the idea, should be. But that's where kind of government is pushing things. What people fail to understand, and investors, like the resi market is huge in every country. I mean, it's the basic thing, right? People got to live, whether they buy or rent. So in any market, like we've seen in the States, there will be various players. And even then, you're not really competing to buy stock or to buy customers. Help to Buy was doing about 40,000 units a year, just new build. So if we're doing 10, and by the way, at that point, we will be doing existing build, which is a vast majority of the transactions. So we estimate our market to be 400,000 to 500,000 homes a year. That's the within our price range and so on and so on. So us doing like 10,000 a year, maybe we can do 20. And I'm pretty sure in a few years, there will be other businesses that are kind of mimicking us in a way or doing the same like we've seen in the States. And that's absolutely fine. But we do have a first mover advantage and the brand advantage. The things that are taking place right now in terms of government, of course, you would have seen the headlines about Help to Buy. They're thinking, what can they do? And rent-to-own might come on the table as an agenda item. Canadian government pledged 200 million to start rent-to-own businesses, effectively as if Homes England would say, hey, here's 200 million. Businesses can apply to get effectively funding to get rolling. That's what Canadian government did. So all those headwinds, tailwinds are there, and so we're definitely benefiting from them. But what I would say is, this is by us wanting to do good in a very huge market. The path is pretty open, also for others to join. But me selling my business, yes, we we absolutely do have the first mover advantage.
Absolutely. That is really, really key and really, really good. And I think it's something that's really exciting for a lot of people in this sector as a whole, because it's a huge sector, as you said, and there's plenty of space for so many different people, because so many different people have so many different business models within the space. But something to really be excited about is amongst all the doom and gloom that we see every single day. And I've stopped watching the media, by the way, completely. There's a lot of positivity. And exactly. Reading news, just stay in your lane, focus, and just go for it. So I really, really like that. And Milan, so let's look at things from three different perspectives right now. In terms of, you guys are growing, you guys are pretty much still in that startup phase. So you need partnerships, you need people, and you need customers, right?
Yep.
So let's kind of go touch up on it from a customer point of view, from a supply point of view, whether it's developers, etc., and then also from an institutional point of view, from a funding. Which one do you want to start off with? And then let's talk about how they can help you and you can help them, basically.
Yeah, let's start with the customers. We do have two customers. One of our customers are the customers, the people, and then also the investors are our customers in a way, because they're holding the assets and they're providing us the capital to enable the program. But let's start with the individuals, I guess.
So what's what you, I guess, looking for from them, and how can you? So for example, you've mentioned the Midlands and the Northwest. So essentially, what you're saying is, if anyone is looking to either buy or is currently renting and is potentially looking to buy a freehold property in the Midlands, or I think you said more West Midlands plus the Northwest, they can come to you as of today? Yeah,
100%. I mean, they can and should go on our website, learn kind of how the scheme works in a bit more detail, and we're also given a map in terms of where we're operating right now. I think one thing, of course, investors always ask us is, what about demand and so on and so on. We were shocked when we launched the product at how much in demand this is. Obviously, we took months and months to prepare this program and took advice from various industry experts and etc. But especially with Help to Buy leaving the market, I mean, it is incredible how much support people need. And in a way, we are counter-cyclical business. So when the times are tough, when the interest rates are high, like today, we have even more demand, of course, because people can't or do not want to get mortgage today at 6%, 6.5%. So they would rather kind of sit that through, build their credit and so on. And then in 3 years, 5 years, effectively, hopefully things will come back and stabilize a bit. So we almost say like demand at this point is insatiable. Like we cannot raise enough capital to satisfy the demand. I'm just talking, by the way, about a fraction of the country. So yes, we'll then open up Northwest, Northeast, East, Southwest, etc. So, I mean, it is as simple as there are a lot of people who need help. And again, we're not going to be providing the solution to everyone. But there is a very, very large number of people for whom this will be very, very interesting. So yes, I would encourage people to go on our website, check out the program and apply.
Yeah. So talking about your second customer, which is obviously the investors and institutions, how can they work with you guys? What are you looking to do, and how can you have this symbiotic relationship with them?
Yeah, so on the kind of real estate front, obviously, as we I think touched on, we're doing a full split in terms of the operating company, the platform, and then we have these like property companies or propcos which sit separately, owned by investors, and they're the ones that own the properties and enter into contracts with the customers. From their perspective, it's a passive yielding investment from day one. It's almost like a bond type cash flow if you think about it. If someone does convert at the end of 3 years, you would have had fixed rental cash flow, fixed repurchase price. So it's a bond with a huge social impact story there, because you put someone into home ownership, a first time buyer. And even if not, even if people leave the home, again, you are then taking that home and putting it into a very attractive open market single family rental space. And there, the aggregation there is really, really interesting for institutional capital. So if you think about us doing 10,000 units a year, year 5, that is about 3 billion of capital, 3.5 billion of capital a year between debt and equity. So at that point, we will for sure have large pension funds, insurance businesses, people that have long-term investment horizons. They love this asset class. I mean, some people even put single family into infrastructure. So like very safe, good inflation hedge, amazing capital growth, amazing yield. And that's kind of where things will go. So the more we scale, the more we'll see those kinds of guys. Also huge social impact and ESG story. And that's the stuff, of course, the pension funds love, insurance businesses and so on, as well as synergies with the customers. You know, we will be having tens of thousands of customers there that will need insurance. They'll need mortgages at the end of year 3. They'll need financial literacy, credit building tools, and so on. So that's the investors kind of later on, but kind of relatively young company like us now, we cannot get access to that capital straight away. So we are needing to go to like more traditional kind of private equity real estate routes that do demand a slightly higher return. And we are providing our kind of operating business exposure in terms of shareholding, so they could get a share in the operating business as well to kind of boost the return. But in any case, on the property side, very attractive passive return is effectively what we're offering to people. Stabilized income from day one, bond type cash flow.
Okay. Yeah, I love that. And I think that's kind of where institutions need to reach out to you, have conversations. Obviously, this is not financial advice, but we're dealing with, high net worth or institutions here. Yeah. So clearly they know what they're doing with this. So yeah, thank you very much for that, Milan. On the kind of last point, in terms of developers, so how can developers work with you guys? Where's the kind of synergy there in terms of the developers' point of view?
So we thought we would have a synergy kind of down the line when we need to do a lot of units, and we need all sorts of marketing channels, estate agents, house builders. However, what we've obviously discovered over the last year, given the market conditions, they need a bit of help in terms of selling the stock and continuing to build. Help to Buy used to make anywhere between 40 to 70, 80%, depending on which house builders, sales, which is huge. That's gone now. But not only is that gone, but rates are now where they are. So like it's an absolute double whammy. And they need to be building more. So in a way, if you think about Kettel, as I said, we're like Help to Buy effectively. There could be a Kettel logo on their website instead of previously there was Help to Buy logo to say, hey, if you can't get a mortgage today, explore Kettel as an alternative. And that's the way in which we can partner with people. And we are working with or having discussions, which we started relatively recently with a lot of the house builders to effectively do that. Which I said again, and that's probably what we're focusing on right now, because it's where the market's come to, and a very obvious opportunity from various angles, including again the main thing in this country, which is supply demand imbalance. Think about Homes England. The main and absolute agenda for them is bringing new supply. Builders cannot build if they don't sell. So that's kind of where we're getting to, and they're all very interested. I'll say that.
Excellent. Brilliant. Okay, well, this has all been really, really fascinating. I've absolutely loved every single second of it. As I said, it's right up my street. Invitation Homes has been a company I've tracked, probably since around about 2017, 18, to be honest with you. And, I listened to a lot of their podcasts that the CEO went through, and obviously everything they went through with Blackstone, etc., from a capital perspective. So, yeah, really, really fascinating stuff for people. So, Milan, we're getting to the end of the podcast, and the main question we always ask to every single member that we get on is basically, what is one way today that people can take away some of your advice and create an income, because obviously the name of the podcast is The Outcome is Income. So, and it could be any advice, we've had all sorts of stuff, but just one piece of advice that people can take away and basically help them use that to create an income.
I mean, apart from starting a very ambitious business, I started thinking, OpCo, PropCo, setting up a business with like 3 of us having kind of more than 10 years experience, very institutional and so on. That we don't need to talk about that stuff. And then also, of course, if you have capital, there will be ways, and the more capital you have, the more people will be onto you in terms of managing that capital and so on. The simple thing I would tell to anyone is just be in control of your finances. And obviously we can't give any advice, but it's not about saving, it's about investing. So in order to create income, you have to have capital to be investing. And obviously there's a small fraction of people that, have capital and can invest. But for the majority of people, getting into a position of having the capital to invest to create income is a struggle. I am a big fan of Robert Kiyosaki and Grant Cardone and those types of guys, in terms of just rewiring people in terms of understand what assets, liabilities, income, etc. are. Maybe so I would just maybe leave an educational message in terms of just get a bit more knowledgeable about how finances work, rather than just taking a paycheck and spending all your money straight away and thinking you'll be saving next month and investing and so on. I hope I haven't crossed any FCA kind of financial.
No, not at all, to be honest with you. And I love that. Not that the FCA will probably be listening to this podcast. I hope so, maybe. But I love that. And the thing is, I know obviously Robert Kiyosaki and Grant Cardone and all these guys, they could be quite loud and shouty, and they are, from a marketing perspective, that's what they do. But if you strip everything back and just look at the key core message, and like you just said, just simple things like assets and liabilities, understanding investment, it's such a simple thing that sometimes we take for granted because we do that day to day.
Yeah.
But for people that are outside of this, that don't understand it and don't know it, it could be a massive game changer. And it probably, as I said, Rich Dad Poor Dad as a book, for some people might be like, well, I already know this is, it's just garbage. Or for some people, it might be absolutely life-changing if they didn't know about all this. And that's the really key is we get all sorts of people listening into this, but I'm sure there'll be a lot of people that were taking things away from this and thinking, it could just be as simple as stop spending, start saving, and then start investing that saving, So, I appreciate that, Milan.
Yeah.
Cool. So what I'm going to do is I'm going to drop the links anyway to all your profiles. So if anyone wants to get to reach out to you, etc., I'll drop your details. I'll drop your website as well if they want to have a look at your website. And also, I think we're going to have a PDF link as well because you've got a slide deck, which is pretty cool. Mm-hmm. So I'll drop that all. If people want to get in contact with you, they will do. But Milan, it's been a great podcast with you today. Thank you very much for joining us.
Likewise. Thanks for the invite. It was quite enjoyable.
Thank you. That concludes the Outcomes Income podcast with your hosts, Saif Derzi and Reese Booth. I hope you enjoyed this one. It's certainly one that I really, really enjoyed recording. And as always, we've got so many more episodes with some amazing people coming up. So please follow, subscribe, share with other people that you think would really, really benefit from listening to these podcasts. We love doing them. We love sharing them. We do it all for free for the love of doing podcasts. So please help us out. Subscribe, like, and share as much as possible.